Good afternoon, and thank you for joining us for this week's edition of Sector Spotlight. My name is Andrew Friedman. I'm an analyst on the healthcare team here at Hedgeye, and I'm joined today with Tom Tobin, Managing Director and Healthcare Sector Head, and Alex Ross, another analyst on the healthcare team. Before I hand things off to Tom, if you do want to submit a question, you can do so on the QA box on the website. And that being said, Tom, take it away.
All right. Well, we've got an abbreviated deck list here. Some of the things we pulled out from our themes deck. We'll cover some of the newer items that have come up in the last few days, including sort of activist stuff that has come up around Athena with Elliott Management, and some short work out of Citron, which we've been getting pinged on and going through, and Alex Ross will talk a little bit about that. But just on the major themes on slide 3, this is what we covered in our themes deck earlier in the quarter. We'll be updating a lot of this stuff, but we continue to work on a few things. I think what's mostly interesting around what Keith's been saying about the Trump rally. Essentially from a politics and policy point of view, the recent sort of continuous scandal around Russia, around the investigation, Comey, et cetera. I mean, I think the issue really here is going to be around health reform and whether or not it's a good thing or a bad thing. I think it's definitely a bad thing on incremental reforms. The budget doesn't look particularly friendly, although the question really is, does anything come to pass? But we're watching the spread of his politics to see how Republicans react and what happens legislatively. And Emily Evans has been our go-to on keeping us well informed on the policy stuff going on in D.C. Our healthcare position monitor really hasn't changed too much over the quarter. We got a lot of good updates on the fundamental side. The stocks have really been coming our way through earnings, most notably on MD on the short side. HCA, I think, was a much worse quarter than the stock reacted to, although it seems to be drifting lower here lately. We're going to do some work on Zimmer in the coming weeks. Emily Evans has been working on a piece about the move of large joint knees into the ambulatory surgical center, which we think will be pretty dilutive to pricing. That should be announced in the next couple of months and be implemented January 1 of 2018. Athena, Exact. On the policy side, we're trying to sync up again. Emily's got a great call on the policy side here. We're looking at these are some of the super sectors where we think we could pick up some names that have underperformed with a positive policy bias if we can overlay some fundamentals. Just a review on the SPX versus the XLV, where we were at the day of the election, sort of ball underwater, fundamentals feeling really smart, and then post-election a pretty massive rally. It's basically in line with the S&P 500, but if you look at the relative performance, you can see that essentially since the beginning of 2016, we're still pretty massively underperforming on slide 8 here. A double-digit spread in performance. The underlying here, I think this is not going to get better, is the insured population. This is a model we've been working on and refining. Just showing on slide 9, you really can't ask the medical consumer to produce more income for healthcare, public equities and private equities, and get paid for in large part by corporations out of their own salary and by the government. The underlying number is basically going to be around 2%, 1.5%, 2% for some time to come. And incrementally, there's going to be a lot of mix shift towards Medicare, and then incrementally, there's a lot of mix shift away from commercial because commercial is getting more expensive out of pocket for consumers, benefits getting sitting down. So I think there's a mix shift issue. There's a slowing in the incremental demand, and what really hasn't blown off, which I think will be an incremental negative for 17 and 18, will be this per capita spending. So you have stores in terms of consumers, and then what they spend or ticket in terms of the per capita spend. Chronically uninsured people came through the system, went to the doctor a lot, got a lot of stuff that they hadn't taken care of in a long time, cared for, and I think we're going to see that ebbing this year and next will be sort of the incremental driver. You can see that Trump rally really driving not really a fundamental expansion, but a multiple expansion, because when we look at the underlying EBITDA growth for the provider set, mainly U.S., to get a sense of what's been going on, you can clearly see that this correlation between the insured medical consumer and the IHF EBITDA growth year over year on slide 11 I think this is pretty robust. I think it's going to maintain for a while. And again, there's a lot of marginal negatives, either policy-wise or fundamentals or other things that we're considering. Given the multiple expansion, I think we can come down quite a bit across a lot of our short names, although we are starting to selectively pick up on some longs popping out of our screens. On the Trump spread, I'm not a politics guy. I leave that to Emily and other people to think about this stuff, but just from a practical point of view, I think the bigger question here is what happens with repeal and replace, I think, is a politics question. Clearly the Senate has their own issues with having to pass the same way that the House did, but depending on how wide the spread gets, how unpopular Trump becomes, what the incremental negative attention is from any number of investigative bodies looking into all sorts of things, this is really how you frame this up. Although I haven't seen, as this has widened, basically healthcare equities outperform by any stretch of the imagination. And then just the new theme that we brought up for the quarter, which I think will be wildly interesting going forward, because if we have slowing volume, what also seems to be happening at the same time is that there's a real scarcity of healthcare workforce available for hire. This is driving up wages. So if we look at the unemployed and looking, we can pull this data out of a monthly update, which is why it's so choppy, and it's survey based from the U.S. Census Bureau. That essentially we've identified a good series to look at what the excess labor slack demand is. About 30 basis points, which is basically zero, in terms of number of people who are unemployed and looking for a job and to be providing health care in the facility. And this has been a problem because a lot of companies started complaining about it this quarter. And what we're seeing in this hourly rate calculation we made off of some of the data is up 10%, substantially higher. So if you have the margin squeeze of higher labor costs, about 50% of all healthcare consumption in terms of the dollar value that flows through any system is about 50% is used to pay for labor, up 10% over a year and a half period. And then if we look at registered nurses specifically, again, we're sort of in that same range of sub 1% excess supply of labor, unemployed and looking, and we can see that average weekly earnings rising essentially lockstep. Again, slowing demand, slowing units, mix shift plus labor costs going up, that's going to be a horrible EBITDA and margin pressure point going forward. We did an update to our MEDNAX deck. Again, we were pretty pleased on the outcome on the quarter and the guidance relative to our expectation of what had been, we thought, a very, very good company, well managed, good reputation, but sort of in terms of stretching how durable the asset was and how durable the operating model was in terms of rolling up physician practice management. And if you go back in time, there was a time in the 90s when physician practice management was a roll-up, FICOR, Med Partners. These are all companies that declared bankruptcy sort of in the late 90s, early 2000s. A couple have made them through, like the PBM at Caremark came out of one of these, one of my best stocks on the buy side ever. But I think we're in the beginning period where MEDNAX and the acquisition model is really falling apart. Maternity is a big piece of that on their neonatology side, which they haven't been able to grow through acquisition for some time, which is why they started buying anesthesiology. But the maternity side continues to slow. Again, they have to hire a lot of labor to service this slowing demand anyway. So margins are pretty bad, which you can see on this spike up on slide 18 on the physician salaries as percentage of revenue. Again, they buy a practice, pay the physicians out of the billings. They typically do better on the MEDNAX system than they do as a standalone. But this massive breakout to the high 60s, the question is how durable is that? Does it come in? The sell side thinks it's coming in. And then acquisition revenue or contribution from acquisitions is again slowing as a contribution. The quality of the assets they're buying is low and deteriorating. Again, slowing volume, rising labor costs. And it's not just them as an acquirer. You can see on slide 20. I think the permanent aspect of this and why it's not going to work for a long time is that it's across the board anesthesiology practices essentially rolling up amongst themselves. So MEDNAX represents just around 10% of the total volume if you thought of each of those docs as deals. They acquired about 400, 500 docs. The total market was about 4,000. It's clearly consolidating. On Exact, and Alex can answer some questions at the end because he's done a lot of the primary work, particularly on the Citron stuff. We went through a lot of this data that they reported out. Didn't really find a lot of truth in it, particularly around the PAMA analysis, which we think was just dead wrong. We'll get into some of the specific questions that we've been asked and answered here on slide 22. On sales and marketing per additional test, that's the big driver. Again, a lot of people don't think they'll ever turn a profit. Clearly getting more profitable on the margin. And then test per cumulative provider. Beginning to roll up here, we think repeat business is going to help on the volume side, although the delta between our estimates and the sell side estimates currently, given the robust short position even so, the delta is shrinking on our end. So up here, we've been pretty successful today, and we don't want to get too greedy, but around here with a little incremental controversy, we'd be more than happy to see Citron in our studio here. They're happy to go on TV and talk. We'd love to get them face to face to debate it out. And then I'll let Andrew touch on Athena.
Yep.
If you have any comments on Elliott or not.
Yeah, I mean, I think I'll just hit on kind of the four main points there. Definitely was surprised to see an activist get involved, just given how entrenched Jonathan Bush, the CEO, is in the company, and just how important he is to the overall strategy. He's chairman of the board, and so yeah, it was very surprising. I mean, I think given the history of missing estimates recently, and having to take down guidance most recently in Q1. They clearly need to work on managing expectations. That's probably an understatement. But in terms of the four things we would suggest an activist do and not do is first and foremost, don't touch Jonathan Bush. Don't try to remove him as the CEO of the company. I think that would be incredibly negative. On the inpatient side, we think that they need to hire inpatient talent. So specifically on the implementation side, as they start to work up in larger hospitals, they're going to need to have someone in there who knows how to implement on a large scale and is respected if they want to grow that segment of the business. Careful cost cutting is the third point here. Clearly, if you look at the P&L, there are elements where they can cut. I don't think that their cost structure is necessarily bloated or there's a lot of excess fat to cut out. But if you look at their R&D expense, it's up 40% year over year. They have I wouldn't want to say careless, but in terms of the culture and what they're trying to build, they've definitely put capital to work where they think it's necessary. And then on the strategic M&A side, I think there's an opportunity to boost top line growth through roll-up strategies. The bottom 25% of the market is still represented by almost 390 vendors. So I think there's an opportunity to do some roll-up there, not on a mass scale, but if you just pick off 1,000, 2,000 provider vendors here and there, it can be really accretive to growth just given the model. And then the only other two things I would say is there's been a lot of talk about selling the company, who would be a buyer. This is something that's been talked about for years. You hear everyone from IBM to Oracle to Salesforce to Amazon, Google, Apple. Every single tech company out there that has any interest in the healthcare space, you've heard them discussed as a possible suitor. And really, I don't know if there's a natural buyer for Athena, and I do actually think that they're probably better off as a standalone company for the long term. So it'd be really interesting to see the debate unfold, see what the activists or Elliott will end up doing, whether they try to force sale or not. And then you just have to be concerned about it's a sensitive time in the company's life cycle. They're trying to enter the inpatient market. So further controversy or uncertainty around the company's future, are they going to be here in 5 years or not, could really do damage to their the small hospital business. And the rumors are already flying pretty wildly. So we're along for the ride. I think hopefully they'll be subtle about it and do more good than bad. But it's definitely going to be interesting.
All right, we got questions?
Yes, we do. Again, if you do have any questions, submit them on the QA box. We got 3 out of the 4 team members here. So we're going to start with rapid fire. I know this is your favorite, Tom, but we're going to give it a shot here. We got 10 questions.
10?
10.
Right.
We'll go quick. We
All
got
right.
this. All right, what is your favorite short? Pass. What is your favorite long?
No, MD is my favorite short right now, I think.
Okay. What is your favorite long?
Athena.
Okay. Will the maternity rate ever return to positive?
Yes.
Okay. Is there still pressure to act on the ACA?
Oh, of course, yes.
Okay. What do you think of Jonathan Bush?
I really like him. If you slow down his written word when you read the transcripts, he's actually incredibly cogent.
Okay. What music do you listen to when working on Black Books?
The Shins mostly.
Okay. Do you think Google Trends are accurate?
It depends.
Okay. Is liquid biopsy a real opportunity?
In the very long term.
Okay. Is the shift to value-based reimbursement real?
No, not really.
Bullish or bearish on dental?
From here, probably bearish.
Okay. Does maternity correlate to housing trends?
Yes.
All right. And will remote internet doctor visits become the norm?
No.
No. Okay. All right. Perfect.
Okay.
All right.
Who wrote those questions?
I'm not telling. So, what else do we have? If we go to, so any comments on the HHS budget that was leaked yesterday?
No. I mean, I'd let Emily comment on that more specifically. I think the pressure, I mean, the real discussion is going to be around the Affordable Care Act and what the Senate's going to do. I don't really think the budget's going to have a big material impact on that in the short term. Particularly the president's proposed budget at this time of the cycle. But again, I'd have to check it with Emily to find that out.
Okay. What is the solution to healthcare in America? Is there a country that does it well?
I don't have a lot of personal experience with healthcare overseas. I have seen my friends in Switzerland don't seem to complain too much. I think people in the UK seem to complain a lot. The German system seems very sensible, and it kind of feels like that's where the US is going with these super regional payment schemes in terms of government making per capita funding outlays to super regional centers, and then sort of that's what the subsidized premium dollar is. I mean, I think that the horrible embarrassment of the United States is really this inability to deflate, and we've allowed so much of the marginal dollar to get soaked up into just routine inflation that we really miss out. Like on Athena Health, like look around at the technological innovation for the last 10 or 15 or 20 years even, and it's so embarrassing. And we're the R&D labs for the world.
Well,
at this point.
you have the reimbursement system that's totally tied to, maintaining the status quo.
And when you say the telemedicine is going to be the thing of the future, it's what I would fear is that physicians and providers and everybody, like the way people treated ACOs was, the reason they failed is because there wasn't enough money to go around, and a few guys sort of organized some of the stuff, made a ton of money, and it faded. It's the same thing with telehealth. People will figure out how to make money off this stuff and then fade. There's no like value-based payment system. You can't really do that unless you unshackle how the prices are made up, which is generally by Medicare, which is generally by a lot of regulation.
Well, it was funny on the telehealth side at the conference at the ATA. One of the themes was not how can you actually make money, but how to lose less money with telemedicine.
Yeah.
I mean, that's another theme too, I guess.
Yeah, it's sclerotic given what happens in every other industry in the world, what healthcare manages to do, and then on top of it, you interact with the healthcare system, you're likely to get hurt. Like there's damage that comes from interacting with the healthcare system. Yeah. But yet they save lives and they cure hepatitis C and they do a lot of great things. But it's a huge social good. But it's like
statistics.
It's depressing.
All right. Other than earnings, are there any upcoming catalysts for Cerner? No, I would say earnings is going to be the next big one, Q2, which would be in July. Do you address any biopharma names? Both look terrible chart-wise. So we're well. You did all the clinical trial data update, and you're working on some of the CROs. Alex is going to do some of the work there. I mean, we definitely see it's the absence of the marginal dollar in terms of capital raise that drive biotech equity valuations, which drives subsequently biotech research funding and clinical trials. So
we're definitely paying attention to it because the slowdown should coincide with a slowdown in the ability to raise capital, which should coincide with a slowdown for the contract research guys like Charles River, Quintiles, Parexel, et cetera.
Okay. Anything surprise you from Q1 earnings that would cause you to reconsider your broader HCIT thesis? No. I mean, I think there were definitely a lot of surprises out of Q1. But in terms of the broader thesis, I mean, if you look at bookings, ex-Cerner, all scripts core bookings were down 6% year over year. I think that goes straight to the fact that the market's slowing, and they're also a third-tier vendor, so they're in a bad part of the market to begin with. Athena's didn't hit their bookings growth goal. Cerner had a very strong bookings quarter, but I'm definitely suspect there. I'm going to need to see at least another quarter or two of really strong bookings to really change my mind there, just given the work we've done that suggests that, I just don't know how they can continue to grow $2 billion or sustain $2 billion in new client bookings a year. It just doesn't seem like the market's there to support it. So, so far we're continuing to be short Cerner, short Allscripts, short QSI, short CPSI, and long Athena.
Nobody's asking about Exact Sciences?
We did get one question on Citron, but it was more or less asking about the spotty record and are we long anything else that he's short?
No, that's an accident. I mean,
yeah. So they've put out 2 reports within the last 2 weeks. They had one out on last Monday, and then another one came out today. And their first one, we found a lot of factual inaccuracies, especially regarding their pricing around PAMA. So one of the things that they were talking about was the ASP drifting down into the mid 300s, which we don't think is likely, and it seems almost impossible from here, just due to the fact that PAMA has a 10% downside limit from 2018 to 21.
You're talking about the Medicare reimbursement arithmetic.
Exactly right.
Yeah.
So that's so the average selling price for Cologuard on the commercial side is based, or on the Medicare side, is based off of the commercial rates, and what it's based off of is the actual contracted rate. And if Exact Sciences doesn't have a contracted rate with a payer yet, they can appeal that rate, and any appeals aren't factored into the PAMA price. So,
right. So they found some contract, or that Humana or somebody was paying a dirt cheap price.
Yeah, it was about $170,
yeah.
And that was years ago, but that's been settled now. But that wouldn't be, if Exact
wouldn't
says
be in the calculation.
We want to appeal
year.
this, it won't be factored into the analysis.
Okay.
And then today they came out with another report regarding MDX Health and Exact Sciences buyout agreement with them that was announced along with earnings a couple weeks ago, and they cited the valuation of that. They paid $15 million for the rights, for the royalty, and Exact got asked about that on their earnings call. Didn't dig in any deeper on valuation, but we're going to do a little bit of work there.
Okay.
All right. So said bearish on dental and the rapid fire.
Yeah,
if they were broadly like tickers, go-to tickers.
In the shorter term, I would probably be bullish because the employment at dentist offices still looks pretty strong and hasn't rolled over. So I don't really see any reason to think that chair volume, treatment sell-through is going to be that impacted.
Yeah.
I did see that Dentsply got downgraded by Goldman today. Something about synergies, something else. I don't know. I didn't see the report itself. I just haven't been focused on it because there's really nothing to do up here on the short side without the data really falling through the floor yet.
Yep. Okay. Do you have any thoughts on how companies like CVS will do over the intermediate to long term?
Long term, I find it.
CVS said that they're coming in, that they're interested in coming into the PBM market. They're doing something there.
Who?
Amazon.
Oh, Amazon.
Yeah.
Was that the question on Amazon or CVS?
No, it was on CVS, but I'm just mentioning that.
Yeah, I mean, PBM was a great business when it was underpenetrated and had very little generic penetration. You send a little blue bin around a pick and pack, and it goes out the door. the blue bin, more drugs is a higher incremental margin, per script, and more generics means more incremental margin. That seems like it's way in the past tense, and there's 3 major providers. It doesn't look super exciting to be long, regulatory tension on your value proposition. It doesn't seem interesting to be long.
And fully consolidated market.
Yeah, contractual disagreements with large payer systems. It just looks like a really crappy outcome, either both on the long side or the short side, because you're either going to get blown up by some left field whack in the head, or growth is just never going to be all that good anyway. So you're just playing this multiple. Are we half a standard deviation or a standard deviation over under some mean? It just looks really boring and risky.
All right. And then who wins and loses in a single payer system, specifically
everybody
California?
Everybody loses in a single payer system. Everybody. We all
lose.
We all lose.
All right. Okay. Well, that's all the questions that we have. Thanks, Tom, and thanks, Alex, and thank you everyone for joining us. Catch you back here next week for Sector Spotlight.